dYdX is gearing up to introduce decentralized order books within its exchange. Joining us now to discuss is dYdX Foundation's Vice President of Strategy, David Gogel. Welcome to the show, David.
Thanks so much for having me. Happy to be here.
All right, let's talk about these order books. They're going to be decentralized. First, why?
dYdX is one of the leading decentralized exchanges today. The current architecture is based on Ethereum and Starkware as an L2. It's been in production for the last 2 years or so. We've recently hit $1 trillion in cumulative volume on the current version of the product. The order books are currently managed on centralized servers hosted in the cloud. And this has allowed us to really scale the product and platform while providing the benefits of non-custodial trading at scale. However, there's been limits to the current architecture, and dYdX trading for the last year and a half has really been focused on building the next version of the protocol, which is dubbed V4, which is an open source version of the protocol that, if and when deployed, would really enable for decentralization at all parts of the tech stack. And so the order book and matching engine would effectively be run by validators that could participate in consensus and really provide a trustless and non-custodial high-performant trading platform for people to trade perpetuals. So this is really important in that it really removes central points of failure in a trading system and really allows for non-custodial trading at scale, allowing anyone to trade the products and services offered by the dYdX protocol.
So nuts and bolts, when the users or institutional or otherwise uses dYdX, what are they going to notice that will be different?
In essence, not so much. The whole goal here is really how do you build and scale DeFi to look and feel like a centralized exchange, but the whole back end really leverages decentralized technology. So today, if you use dYdX, it looks and feels like a centralized exchange, except really users have full custody of their assets at all time, and they interact with smart contracts that really replicate a lot of the backend infrastructure that several centralized exchanges provide, but do it in such a way that the code is open source, transparent, anyone can access the data, and really taking out central points of failure. Ultimately, V4 and the dYdX chain is kind of the next iteration of that. Today we have a lot of institutional investors who currently interact with the exchange. They're used to trading with order books, and dYdX is really the leading decentralized exchange that is really predicated on the order book based model, which is something that people are really familiar with.
What would those institutions and the like that are regulated or might have some regulatory oversight? What kind of hurdles will they face in using this now that it'll be more decentralized, and how do you address it?
It's a really good question. Today, again, we have a number of institutions that trade on the platform. They're familiar with kind of the order book based model, and at least in the current version of the protocol, many have gotten comfortable with the on-ramps and off-ramps. Today, it's a USDC margined and settled perpetuals contract that is available to users around the world, but is not offered to people in the US. Or U.S. persons, and institutions have gotten comfortable with that construct. Again, decentralized exchanges are unique. They don't take custody of user funds. And so, the applicable rules and regulations are less clear in terms of how they apply to DeFi protocols. And, ultimately it's up to institutions to determine, with their own legal counsel and what their risk appetite is. But so far we've seen really strong adoption with the current version of the protocol, and very strong interest with our, the current testnet and the upcoming launch of the V4 chain.
On that note, the ecosystem is shifting from Ethereum to Cosmos. Are there any security concerns with migrating ecosystems here?
Yeah, so there's a lot to consider. Again, the V4 project has been under development for a year and a half or so. We've distributed dYdX tokens on Ethereum to over 70,000 unique addresses and governance participants who have participated in the current version of the protocol. Our community of token holders has really been driving the governance proposal around adopting the next version of the protocol, dYdX chain, which is based on the Cosmos SDK and Cosmos BFT consensus protocol. And so, the big question is how should we migrate our current user base to this next platform? Ultimately, it's something that the community is currently actively debating. We're expecting kind of open sourcing of the software in the near future, and the dYdX chain to launch, subject to a number of governance proposals that are driven by our community. And ultimately, there are security risks with any migration. It's a huge undertaking. But ultimately, we feel very confident that if the community decides to support this migration, that it is the next big step for the dYdX ecosystem, which is really the launch of the chain and a whole set of new kind of security considerations with the launch of a proof of stake blockchain.
Speaking of your community, I got to ask you, a judge recently found that Tornado Cash meets the bar for being seen as an entity, saying that it's an association composed of the founders, the developers, and the DAO, implying that the token holders can be seen as people who are participating in this entity. Has that changed the way you think about building out the ecosystem here? And have you taken any precautions or put any processes in place to protect token holders should they face legal action like we saw with Tornado Cash or UkiDAO before that?
Absolutely. It's a great question. Obviously, DAOs are really a new construct. There's been a lot of iterations on what works, what doesn't. The dYdX Foundation published a blog post over a year ago now, really making the case for what we call a Guernsey-based purpose trust, which is a structure that really helps potential sub-DAOs limit liability for DAO token holders, but still provides kind of the on and off ramps with the off-chain world from a legal and tax standpoint. In the last 2 years, we've really seen the community drive two different sub-DAOs forward. The first is a grant sub-DAO that received funding from the community treasury and has funded over 120 or so grantees with several $1 million in capital. And then more recently, an operations sub-DAO that receives $6.6 million in capital to run community infrastructure on behalf of the DAO. Our view, is really to support the community in making thoughtful decisions around progressive decentralization, and these sub-DAOs have been an effective tool to be able to drive core infrastructure and growth of the protocol, while really supporting the 70,000 or so token holders who have participated in our ecosystem. This is an evolving space, but so far we think that we've taken kind of measured approaches and are quite comfortable with our approach relative to others in the industry.
David, thanks so much for joining us this morning and giving an overview of your ecosystem.
Thanks so much for having me.
That was dYdX Foundation's Vice President of Strategy, David Gogel.